The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you for being with me this evening on the Juneteenth holiday. Would one of you gentlemen please type in the question box that you can hear me all right? Here we are. Thank you, David. Good to see you here again, mate. And it's a Juneteenth holiday in America, folks. It's a federal holiday, and markets have been closed for the day session, the RT8 session, at least. So good to have you here. Our numbers are down a bit today, but not surprising. I guess there'll be a lot of people on holidays. And my guess is that there are going to be a lot of people who are going to take tomorrow off and make it a long weekend. Thank you, Pieter. That's grand to hear from you. Great, David with us, Giggs with us over in North Carolina. Greg Palladini, of course, is with us, our stalwart Danielcode trader, wealth manager, and all-round good guy. Greg's from Texas now. Used to be from Colorado Springs, is with us, of course. The other Greg, many Gregs. Jeff's with us, very important. Good to have you with us, my friend. Mal's with us, haven't seen you for a while. Mark L., our champion, our all-time champion. And a great supporter. Wonderful to have you with us. And Michael, Dr. Michael, is with us. He's a very interesting chap. He came and did a tutorial with me, a live tutorial in, I think, Colorado Springs many years ago. And he came back recently and is doing the TTT course. So it'll be good to talk to you when you're ready. Michael, Peter, Max with us, and the other Peter, and the other Peter. And Steve and Vicky's with us. And as I say, we don't have many lady members, and it's grand to have you with us. Thanks to Peters and David, Jeffrey. Three Jeffreys. Haven't seen you guys for a while. Two of you I know. With the other one, welcome, my friend. Good to have you with us. Okay, so here we are. The long pull. I'm going to actually talk to you today about day trading, as well as the long pull, the two extremes of the market, which we tend not to cover much. I always trading and talking to you about daily charts, but day trading is a skill. It's recently, I must say, I've been looking at it more and more and teaching my son to do a bit of day trading because the ranges that these markets are doing, the equities, even though they've been somewhat subdued as they wait to see what's going to happen with the tariffs and other issues, the daily ranges have been quite massive. So day trading's been very profitable, and it's not something that I recommend. However, if you're going to do it, I'd like you to do it safely and in the best winning way possible. So I'm going to show you some day trading technique to go on top of the moving average method, which I talked to you about 2 or 3 webinars ago. And we're then going to talk about the long pull. And of course, this chap you're looking at his picture now, Jesse Livermore, he's an absolute legend. And he was called the Boy Plunger. He was a fearless trader, and he made and lost several fortunes. And you get that sort of contrarian approach. Let me show you that. There's another photo of him without his straw hat on, and he was a real person, and he's considered a pioneer of day trading. Although his big money was made with what he called the long pull, the buy and hold, or the sell and hold. Even it's called the long pull. He's talking about the length of time he held those trades. As he said, I made the big money with the sitting, not my intellect, but the sitting. You hear that? I'll show you that quote. And excuse me, there's a book written by Edwin Lefebvre about his life story. And of course, he wrote several books himself. As his time went on with him, he went from being an absolute superstar to not being able to trade very well. And things had changed. The market had changed. I see this all the time. People have really hot trots, and then the market changes, but they don't. So the winning system becomes a losing system. And anything that you're looking at in the terms of emotion, human emotion, things that are hard to measure, the market knows. If you're taking any signal from anything except market, you're kidding yourself, because it might work for a while, then it'll be wrong. And that's it. You come to the Danielcode, everything we do is based on market action. The markets talk to us. The markets tell us what they're doing to a certain extent, and it's pretty extraordinary stuff. So let's move on a little bit. Now, markets are rational, orderly, and sometimes predictable. And survival requires strict adherence to the rules. And I have this little quote at the beginning of all of our webinars. Many years ago, I'm thinking maybe 20 years ago or more, somebody asked me to write a comment to review markets, and this is how I started it, by saying markets are rational, orderly, and sometimes predictable. And people don't believe that. People have fallen into the trap of the. So did the Nobel Peace Commission. They gave a Nobel Peace Prize to a couple of economists who wrote random walk theory, and that's based on the fact that no price action in any single bar has any ability to forecast what's going to happen tomorrow. And that's not quite right. In fact, bars, and you'll see more and more of it today as I talk to you, the price action has a high probability of telling you what it'll do tomorrow. In fact, those of you who have done a tutorial with me, you've heard me say the markets talk to you. The markets have always been trying to talk to you. The limitation has been that until we had the Danielcode, we didn't have the language. We didn't know the language of markets, and now we do. And time after time, you'll have heard me say, market is talking to you. And what it's saying is, I know these ratios and I'm tracking them. And occasionally it'll say, not these ratios, try another ratio. And that knowledge, folks, is absolutely priceless. And any of you who are thinking of doing a tutorial, we have two streams of tutorials. We have the masterclass tutorials, which are one-on-one with me. They're done on this same web application as we're using now. It's called GoTo. It used to be called Citrix. It's now called GoTo. And that one-on-one web tutorial with me is done personally by me with you, and it's somewhere between 6 and 10 sessions, just depending on how quickly you pick it all up. As an alternative to that, we now have our TTT, Teach Yourself to Trade, which is a video series of trading, and that's been very successful. And I introduced that because it's a way of giving you the same product, but at a much cheaper price point. I have to tell you, I found that even if you're doing the TTT course, for many people, it's been very beneficial to have a chat to me because things that I have said or laid out, or charts I've shown in the TTT course, while they appear crystal clear to me, they're not always so crystal clear. And I certainly have people, very intelligent people, saying, I don't get that. So what I've done recently and will continue to do is, if you do the TTT course, when you've done it and absorbed all the material, I'm more than happy to have a conference with you, a chat with you, or as many as you like, in fact, to make sure that you're getting absolutely the optimum result out of the Danielcode, which is a great big piece of magic wrapped up in a bundle of wonderment. Once you see it, it's extraordinary. So, just dealing with Jesse, I'll just fill in a little bit of it. He left home as a young man, 14 or 15 or so, and started working as a board boy, writing up the prices at a bucket shop, which is what was the go in those days. And he was then called the boy plunger, a reckless gambler or speculator, he was, critics said. Anyway, he was very, very good at it. And between at the age of about 16 or 17, he put together $1,000 pretty quickly, more than that, several thousand, and he bought $1,000 home for his mother. And he said that was to repay the $5 she had given him before he ran away to become a trader. Time goes on from 1895 to 1897. He was 18, 19, 20 years old. He accumulated a $10,000 trading profit, and that was a 1,000% net return in 3 years of trading. These were bucket shops, and he was doing so well he got banned by a lot of the bucket shops. In 1900, at age 23, he moved to New York, and he turned his $10,000 stake into $50,000 in 5 days. So this is all from Wikipedia. You can read it yourself. It's very interesting. Then he his first big win came in 1901 at the age of 24. He bought stock in Northern Pacific Railway and turned 10,000 into 500,000. That was a massive amount of money. It's still a massive money today, isn't it? But it was both those days. It was a fortune. Anyway, he started living the good life. He started vacationing in Florida, bought himself a nice yacht, and lived the high life. In the panic of 1907, his short positions made him $1 million in a single day. However, his mentor, J.P. Morgan, who was bailing out the entire New York Stock Exchange during the crash, requested him to stop short selling, which he agreed. And he profited from the rebound, making $3 million. So he bought a $200,000 yacht. Boy, what was $200,000 worth in those days? It must have been some boat. Pretty wonderful. Anyway, one of his greatest feats is he sort of secretly cornered the market in cotton. There was no electronics around in those days, and this was all mainly bucket shops. He went to enormous lengths to conceal his trading, to buy in different names with different brokers, etc., etc. Then he was actually asked by the president, Woodrow Wilson, who was who got a call from United States Secretary of Agriculture, asked him to the White House for a discussion to stop his move. He agreed to sell back the cotton at break even, thus preventing a troublesome rise. When asked why he had cornered the cotton market, Livermore replied, "To see if I could, Mr. President." What a guy, isn't he? Anyway, long and the short, he was a guy living the good life. He had 4 or 5 different wives, and he had some ups and downs. He went bankrupt 2 or 3 times, and he, as I say, he lost his abilities. And what happened is the markets changed. And one of the things that changed them was regulation. In his early days, markets were not regulated at all, or minimally. And as regulation came in, so a lot of the trading methods he was using, he couldn't do that anymore. And because the markets changed in their nature, he didn't change. And he lost all his money. And he finished up, it's a sad story, at the age, I think, of 63. He was at his favorite Manhattan hotel, and he wrote a note to his wife saying, I'm sorry, I'm a failure. I've lost the magic. I can't go on. And he put a bullet in his head. So what I'm going to do today is ensure that you guys can be just as good, in fact, a better long-term trader than Jesse, but you'll finish up with many, many dollars in your pocket and not a bullet in your head, because I'm going to show you, as always, how to trade not only profitably but safely. And we'll get to that. So I'm going to talk to you about three different things today. One of them is the short-term trading. I'm going to show you how to do the long pull with the Danielcode trading channel and what that technique will offer and what its limitations will be. And I'm going to take you into the long pull with Beyond Masterclass momentum bars. And lately, over the recent webinars, I've been talking to you quite a lot about these momentum bars, and they're quite extraordinary. And when I show you how that works on the long pull, you're going to be amazed. So bear with me as we go through several different ratios here. So this is all going to be part of, is now available as a new TTT lesson. It's a massive lesson. It's going to be close to 2 hours, because there's 40 minutes of it on short-term trading and a bit more than that on the long-term trading. And that is going to be available starting on Monday. It's going to be lesson 6 of the TTT series. I'm going to charge you $1,900, and it's going to be, as I say, it's going to be a massive lesson. Actually, two lessons combined: short-term trading and long-term trading. And for those of you who are ready to get started this month, and you email me, if you're the first 5 to do it, I'm going to give you a $600 discount, seeing as it's Juneteenth Day today, and everyone likes a deal. So that will take that down to $13.99, which is an absolute bonus. So do that. In fact, get on your email now, jneedham@thedanielcode.com, and be the first to email me saying you'd like to sign up to start the TTT Lesson 6, short-term trading and long-term trading, and you can start on Monday. So get onto that, and we'll talk as we go along. Okay, so here we are. This is short-term trading now. This is the S&P E-mini. What this is the continuous chart. Day traders all trade, the RTH, the day session. That's why they're called day traders, and they're flat at the end of that session. If you are using an ES1 chart, in other words, the regular trading hours, the RTH as it used to be called, you will be all at sea. You have to be running the continuous chart. That's what this is here that you're looking at, because the signals from the continuous chart is what you'll need to know about when the market opens if you are trading RTH or regular trading hours. If you're trying to create these signals off the simple day-only chart, it doesn't work very well, because the price action overnight is very important for what's going to happen when the day session opens. So you can see this. These are basically Danielcode time signals. Those of you who've already done the Danielcode time trading tutorial, that's all these are, quite straightforward. There's your buy and sell signals, and you finish up being with the market almost all the time. This particular chart that you're looking at is a 29-minute bars. That's what I use. As I've got a bit older, I've slowed down a bit, but you can do a 14-minute chart. You can do a 6-minute chart if you wish. I've spent many years trading 3-minute charts when I was a lot younger and a lot more enthusiastic, and indeed nimble than I am today. So 29-day charts are fine for me. 29-minute charts, I should say, are fine for me. If you want it a bit slower, you can go to 59 minutes or 44. You can use any of the Danielcode ratios, and they all work just the same. So you can tailor-make your short-term chart to fit in with what's good for you. What do you feel like? You know, you're emotionally happy with 29-minute charts, are going to get a new signal and execute it every half hour or so. Is that too fast? Go to a 59-minute chart. Is that too slow? Go to a 14-minute or a 7. Go to 3 if you want. It's all the same to me. It's your money. All I can do is tell you the optimum way to trade and make money. It's up to you to execute. So you can see this just very straightforward. Nothing too magical about this once you understand how the Danielcode time signals are created. And as I say, these markets have had some enormous intraday moves. They're very, very substantial. I never thought that I'd be tempted back into short-term charts, but I've only been doing it to teach my son, and it's been quite an experience. The volatility is wonderful. If you've got it right, you'll make a lot of money. And as part of making sure you get it right, that's going to be the next TTT tutorial available on Monday. It's going to be lesson number 6. And it's going to be about an hour, a bit less than an hour on short-term trading, and much the same. It'll be a separate video about long-term trading. So you'll have 2 parts to it, A and B. Wonderful. So S&P time and price. I want to just emphasize to you how orderly and well organized these markets are. All I'm showing you here, this is a 24-day chart. We're swapping around between different time charts today. We're going to be looking at 3-day charts, 6-day charts, 24-day charts, and of course daily charts. So all I'm showing you here is the last correction in the S&P. And where did it go to? 50% of the run up. It's incredible how accurate markets are because they're orderly. They know where they're going to turn, and they'll talk to you if you understand trading, particularly trading time. So look what happens here once you shift time frame. This is the 6-day chart. Look at the clarity it gives you. You can see that the August 2024 correction there, it went straight down to the 37.5% retracement. That's the second of the numbers in the Danielcode sequence, and it's the one that actually doesn't come from Daniel's writing. It comes from the rule of 8s, which in fact the rule of 8s comes from that same piece of writing. For those of you who've done a tutorial will understand that. So there was your 37.5% retracement. Then it continued up to make its high, and look at that retracement. It looked disorderly, but it was so orderly to be hardly true. It made a 50% retracement. How accurate? 3 points. And you're talking about a market that's sitting at about $4,800. 3 points difference. Extraordinary, isn't it? Does that all the time. And that's what I mean by saying markets are rational, orderly, and sometimes predictable. You'll see this stuff if you just follow the Danielcode ratios. This is my long-term chart in T-bonds. You've all seen this. I've been showing it to you forever, basically. At various times we popped it out. And as you know, as Greg from Texas, he's actually a retired wealth manager now. I think he's a gentleman of leisure. He was telling me he was down in Florida and enjoyed the beach down there very much. But Greg had a lot of T-bonds when he was, this high came in March 2020 in his business. And we track this thing down. And if you look at this, you'll see there's a red line running diagonally left to right. That's the main part or the median of the Danielcode trading channel. And we stopped moving that in September, I think, 2016. So since then, the market's just been doing its own thing. We've had no interaction with it because I created this signal, and when I found that it had found the high before the high, which is so important if you read Mr. Gann's work at all, it found that so perfectly, I stopped moving it. And I haven't really touched this chart since September 2016. Yet, once you've got this understanding, this is called the Danielcode trading channel. It's a proprietary setting. And once it breaks out of the one Danielcode deviation, or called a standard deviation, we use a non-standard deviation. We use one of the Danielcode ratios for it, and they can vary. You can see that once you've got that, as it breaks through that, you can just simply extend the channels. You can have 2, 3, 4, 5, 6 channels, as many as you like. And of course, Newton's law is that all action has an equal and opposite reaction. So that high came in at 1, 2, 3, 1, 2, 3 Danielcode deviations from the mean. So as a minimum, we expected the correction to be 3 Danielcode deviations from the mean. And in fact, as you can see where we are down here, this support is at 6 Danielcode deviations from the mean. Extraordinary, isn't it? And that's what happened just a few weeks ago. So this is the support for my argument that markets are rational, orderly, and sometimes predictable. And that was pretty extraordinary. And you should look more at it. So what I've done is, this is the same chart, but I've taken off all the time cycles and the notes and all my scribbly bits of stuff all over it. And you can see that this high came in March 2020. This is a UST bond, very, very important market. And as we've said there, it went from 2 standard deviations above the mean down to 6 standard deviations, non-standard, I should say. I say standard out of habit. Do forgive me. It's non-standard deviations. They're Danielcode deviations from the mean. And it's gone down to 6. And look where it's got. It stopped there almost exactly. I mean, look at the low. The low punched through a little bit. Look at the bar before it and after it. They know where that support is, and they're tracking it. It's extraordinary stuff. So what I've done here is I've added the long-term Danielcode trading channel. What this is, it's a trade navigator function, and it's called a regression line channel best fit. That's what it's called. You'll have it on your trade navigator. I'm sure all other programs have something similar. And what that does is it will try and expand and contract to fill any pattern that the market delivers. So for that reason, it's useless. It's the old story. A person who defends everything defends nothing. But instead of just chucking it out, I got a bit obsessed with it. And over the years, I created some rules to use with it. Once you understand those rules, you can use this tool, and it's absolutely magical. And one of the most important parts of that rule, I'll just get a tool here so I can highlight this and show you. Here we are, spotlight is what we want. Is this bar here, the first bar, not the high, the first down bar from the high. So this is running from the swing high in March. Remember, this is a 24-day chart. Every bar on this chart is 24 trading days. And the first push down is the turn has happened. There's the low. And we call that part of the first push down. And one of the rules is that that first push down must have contact with the lower. This is a downward facing channel. It must have contact with the thin light blue line running below the mean or median there. That's vital, because once it loses that tether, it tells you that the whole channel is no longer valid. And what it does, even when it becomes no longer valid, it still shows you pretty much the same thing. But what happens in here, this is quite extraordinary. You can see that apart from an inside bar, which we don't count, there's been no close outside that channel from March 2020 all the way down to the low in September 23. Extraordinary, isn't it? And look where the market's tracking now. It's just bouncing off that support at 6 Danielcode deviations from the mean. How cool is that? It's amazing. It shouldn't happen, but it does. And I will show you when I get back to my other tool that when we went a couple bars more, we'll get this to change. Here it is. So this is the same thing, T-bonds, this is the Danielcode trading channel on it. So every close is within the Danielcode trading channel, which is extraordinary because we've started this from the swing high. These Danielcode trading channels work either from the swing high or the closing high. But to find have the availability of the closing high, you can only look back one period from the swing high or swing low. If we do have a closing high, one bar before or after the swing high, swing low, I will always start from the closing high, closing low, because this tool takes 3 bars to open up. And by starting there, I get it to open up that 1 bar faster, and it works perfectly. So every close in this whole massive rundown from 2020 all the way down to the lows in October 2023, 3.5 years, not one close outside the Danielcode trading channel. Huh? So this is a very, very important technique for your long-term trading. Because once that trading channel breaks its contact with the first push down, it's no longer valid, and you can see that a close outside that channel tells you that the trend has probably changed. And I say probably because with markets, we're always dealing in probabilities. There are no certainties. But with some of our tools, the probabilities are so high that they become not a certainty, but about as close to a certainty as you're ever going to see. So have a look here what happens. Once this market breaks out here, this is the bar that's gone ahead. It's broken out the upper side of this channel. It's done a key reversal bar, and it's fighting to get back into the channel. And you can see it's still closing within the channel, as is the next bar. Then you get a little up bar, and then you get the final down bar. And it's gone past it's trying to get back to the middle of the channel, and it can't. So the first up bar that has a close outside the channel tells you that whole big mover down is over. Okay, and you probably would have been suspicious of these 4 closes down here running down the channel. Look at that, isn't it beautiful? It stopped. It stopped way back here. We're talking about 1, 2, 3, 4, 5, 6, and 7 months later after we stopped moving the channel, and the market has still been tracking this. The market knows and understands these numbers, even though they're an extension of the now ceased Danielcode trading channel. Brilliant stuff, quite extraordinary. And you can see that it also managed to stick its head in on a minor time cycle there as well. So here we are. Oh, yes. Thank you, Ralph. I'll look forward to that if you come back, mate. Let me know. Send me an email. We'll get you fixed up. Rolf has become the first person to sign up for the new lesson 6 of the TTT course, which is fabulous stuff, Rolf. Thank you. I'll look forward to that. Okay, so moving on. Watch closely what happens here. I've told you this bar here is key. It must maintain that contact, and we run it forward. Look what I've done. I've run it forward 2 more bars, and what have we got? The contact with that channel low is lost. I just added 2 bars along here. Not much, is it? Still looks good at this end, but here's the clue. It's lost that contact there. It's hard to see, but it's broken the contact. Not by much, hasn't got to be by much. It either, everything in the Danielcode Parthenon is a light switch solution. It's either on or it's off. It either has contact or it doesn't have contact. And when it breaks that contact, that's telling you that's as far as that can go back your 2 bars to when you had contact. That's as far as that big long trend move can move without giving you a effective change of trend. Pretty clever, isn't it? I think so. I use this tool all the time, every day, and it's wonderful. So this Danielcode trading channel defines the trend, and it also captures the failure point. This is the S&P. This is still the 24-day chart. And you can see from that important low in October 22, that big run up into the January 25 high. Once you put it, you change the time cycles. Instead of looking at it on a daily chart where it looked pretty disorderly, put it on a 6-day chart or a 12-day chart. This is a 24-day chart. This is as long as we go. But what you can see here is that whole run that's gone from that low in October 22 all the way up to the high in January 25. There's one close outside the Danielcode trading channel. Pretty extraordinary, isn't it? Same thing. We started from this bar before. This was the swing low here. The bar immediately before it was the closing low. In other words, it had a lower close. So I chose to use that. I will always use the closing high or closing low if it is available, but you can only look back one period from the swing high or swing low to find that closing low. And look at this thing. It's just run up there like a beautiful little one close outside, one close, one measurable counter trend there. There it goes, and here it is. Once you get the break, the close outside it, that moves over. Where did it go to? 50% retracement of the swing, the last swing. Amazing stuff. What's it been doing since then? It's tracking up the bottom of the channel. It's trying to get back into the channel. There's its high, right at the channel. There's the current high, right at that channel. Trying to get back into it. I think this is a couple of weeks old, incidentally, this chart. I might have got it from the last tutorial I had. So in lesson 5 of the TTT, you learnt about momentum bars. And I've been flogging this point for the last, I don't know, last 2 or 3 months maybe, that when you don't have momentum bars, you have consolidation. And it doesn't look like it because in the word consolidation, we're all used to looking at bars that go sideways. Well, there's a different sort of consolidation. These consolidations, one lot of them go sideways. The first one you see on the left of the screen. The other 2 are on one of them on quite a steep angle, and the other one's at about half that angle. But there's no close outside that operating range of daily high, daily low. All of these markets, they break to the high, they go back and close in the range. They break to the low, they reverse and go back into the range. So they're bad trading. And that's what happens when you don't have momentum bars. So when you do have momentum bars, that's when you get trends. And what we can do is, instead of just using the daily signals to create the momentum bars, we can switch our time cycles. We can switch to a stronger chart, and this is a 6-day chart. This is still UST bonds, but this is a 6-day chart. In other words, every bar is created by 6 trading days. Have a look where your momentum signals are now. There's that buy, you get a big run up, you get a sell down into a low, which runs back up to another sell, down it goes, and you get that big long run. Have a look at the length of these runs. And I'm not suggesting you trade 6-day charts because the risk is too big. But what I'm suggesting is remember, with this is an entirely, totally different application. We're not trying to find the highs and lows of the move. We can find the highs and the lows of the move on any daily chart using our Danielcode time tools. Using the Danielcode time cycles, we will find every high and every low. We're not trying to do that here. What we're trying to do is find a very conservative but very committed change in probable trend based on the momentum bars on a 6-day chart. And once you've got that, it doesn't matter whether it's at near the high or near the low. The signals themselves usually come 2 to 4 bars after the swing high, swing low. But don't forget, for those of you who've been coming to my tutorials, there is a duality about these signals. And sometimes when you get a signal at the end and you get a close outside, the tool that you don't see, but there's a tool that defines all of these bars, whether they are within the operating range or outside it. When you get a confirmed signal outside the operating range, probabilities are it's going to reverse. That's the most likely probability. And just knowing that, as you'll see as we move on, you'll see some other charts where I put a buy on and immediately a sell the next day, or a sell on, immediately a buy the next bar. And that's because of this duality that you get the signal, but what is actually happening is that there's a body of price material. In other words, let me get my tool again. Here it is. And see if I can make this clear to you, because it's very important. There's a body around here. You can see it. Okay. Up, down, up, down. Inside that, if you saw that on a daily chart, this is much stronger, of course, so just think of its daily bars for the moment. That's the operating range of the market. That's as far as it can go without creating a breakout. And breakouts are exactly what we're interested in, because a couple of things flow from this that you may not be aware of. Talking to one of my tutorial guys earlier this week, lovely guy. He's doing the TTT course now. He did a live tutorial with me in Taupo, New Zealand. What was that? How many years ago? 14, 15, 16 years ago, Mike. And I'm sure he's here today somewhere. And he was starting to put on his trades, and his buy would run for a day, day and a half, be stopped out. His sell would run for a day, day and a half, be stopped out. He was trading 3 markets. The third one was going great. Those two were a problem. One of which was the S&P, which at the moment is one of the hardest markets to trade unless you understand the Danielcode time signals pretty perfectly, and of course the price signals which we create for you twice a week in the members charts. But at this point, when it's filled out, you see this low here, this high here, this low, that's a half low, this low here, that's as far as the market can go. It's now got that flexibility or the elasticity in that put on a 14-day high of the last 14 days, lowest low of the last 14 days. Put on those lines and you'll see it straight away. That's as far as the market can move without having a trend breakout, which will take it to a new level. It's those breakouts. That's what we want to be trading. We want to be trading that. We want to be trading this. Of course we do. A little run up here. This is a 24-day chart. That's about a 1, 2, 3, 4, 5, 6, 7-month move. There's a 6-day chart. I'm sorry. So it's a month and a half. It's a nice move. That's good trading. So it's essential that you understand this concept of breakout of the momentum bars. This, as I said, is the same chart you've been looking at, just a different way of presenting it to you. So here we are. Here's we can move on and yeah, we've got that one. So let's move on to the next. This is taking a bit of time, folks. So I hope you'll bear with me. It's important stuff. And for those of you people who have stocks, whether you're stocks traders or you're investors, these Danielcode tools work perfectly. This is Halliburton, which is a big marine and supply company. Have a look how this thing just identifies the important trend changes. This is one of the ones I was talking about. The first thing you can see moving in from the left, you can see a buy signal, and that bar, you can't see it, but it's closed outside the allowable range with the tool that goes with this program. So that immediately tells you that's an exhaustion move in all probability. So you would take the sell next day if it's elected, and it is. So you had a buy, but it's a buy failure because of where it happens. And if that low is taken out, you want to be short. And guess what? We've moved to a 3-day chart now. In other words, we're still getting the stronger signal because we've got away from the little bit of randomness that can be associated with any daily chart. We've moved to a 3-day chart. Each one of these bars is 3 trading days. Look how incredible these signals are. And I repeat, we're not trying to find the highs or the lows with this tool. Sometimes it will give it to you. More often than not, it'll give it to you when the trend change has already occurred. And as I've said to you, we can find every high and every low to the day with the Danielcode time cycles. We know that. This is something different. This is giving us the tools to show when the market has gone so far that it's pushed outside its elastic envelope and is going to create a new trend either up or down. And it's very, very valuable. Here's the next instance of this buy. This is the trend confirmation buy, and on a bar that's closed outside the range. It's very, very late in the run up. In fact, it's so late that it's become a failure point. That if the low is taken out of that bar within 3 days, not counting inside bars, you must be short because it's a reversal signal. And it is. And you get this lovely big run down into here. Rally up, another down. It's all down. There's no change. There's no buy anywhere in here until this last week. And that's stock. So if you're interested in stock, if you're a stock trader or you want to be a stock trader, they work exactly the same as futures and exactly the same as Forex. All markets work the same on the Danielcode ratios. Okay, very important because there'll be a lot of you, I think, who will own stocks anyway in your 401ks, etc. But if you fancy yourself as a savvy investor, you should know this stuff because it's absolutely deadly. Okay, so that was Halliburton. What I've done here is I've given you the same chart, but we put on the Danielcode trading channels. And you can see how precise they are. And it looks like a whole lot of jumble. I can assure you when you do this often enough, it becomes second nature to you. You can almost see them before it's even happened. And it just brings that next level of certainty to your trading. And if you're in any doubt what was going to happen here, there's your breakout bar right there. Remember, this is a 3-day chart. It's become much faster on your daily chart, but there it was. Just breaks out. Good stuff, isn't it? I think so. I think it's wonderful. Okay, what you do once you've got that 3-day signal, take the next buy on the daily signal. If we're trading daily bars, which most of us do, just wait for your next buy. It comes 4 days later. Take that buy. It's a $17,000, $18,000 trade up in crude oil. Awfully nice, isn't it? Yeah, I thought so. Okay, so hurry up, Needham. I'm sorry if I'm going to keep you a bit late, folks. I can't tell you anything more important than understanding this stuff. Here's the same thing with gold. Okay, this is a 24-day chart. Look where that signal comes. It comes late. Look where the reversal of the sell is. It comes late. But there's some part of $55,000 in that move. And in the down move, there's some part of 30,000. And yes, the signals come late. We're not trying to find swing highs, swing lows. We can do that on our daily charts to the day. This is trying to find us. It's a methodical. There's the word I was looking for. It's a methodical way of looking at these trend changes, these bigger trend changes, which are not apparent to most people. In fact, nothing in the Danielcode is apparent to most people. Here's gold. Have a look at it. There's the same chart. I've just moved it along so I can show you the separate moves in here. There's a nice $30,000 move. There's a $50,000 move there. Then a 16, then a 20, then 18,000 down. It's in bracket because I haven't put the minus in front of it to show that tool it's going down. I'm not suggesting that you would trade this stuff at 24-day bars. The risk putting your stop in the right place is incredible, and it's not possible. This is to tell you the overall trend and the magic of what the market is doing. And here is the final chart. It's got to the end of the gold story up to date, and same thing. There's your 59,000, some part of that, 20,000, some part of that, 18,000. You get pretty much all of that. That's nice. And here's your last trade up that you got. You had your MOMO buy, momentum buy signal there. Take the first entry, July the 24th, July 2024. That's an 80,000 odd trade, some part of it. But you would have got your trend from this chart and observe that trend with all of your trading. Here's how you trade it. This is down to the daily chart. Take the next buy. You can start off with the highs if you want to, or you can just take a daily high where the arrow is in July 2024, $83,000 to where we closed today. Pretty clever stuff, isn't it? Okay, some part of. On our front page, folks, we've got 4 videos that are presented by Danielcode members. Video 1 is Mark L, who's with us today. He's almost always with us. The next one was Justin from the Hunter Valley, video 2, and video 4. Video 4 is quite extraordinary, as is video 1. They're all extraordinary, actually, but video 4, Justin goes through 100 years, over 100 years of backtesting. Not meaning he's as old as Methuselah, but he picked every market you can think of that we cover and some that we don't. And he's backtested them for 1 year, 2 years, 6 years in some cases. Add up all those years he's done, it's well over 100 years. And he's never had a losing year using the Danielcode time signals. Okay, so you can learn all this stuff in your Teach Yourself to Trade series. It's a video series, and you should know about all of these. And there's a new lesson number 6. It teaches short-term and long-term trading, from day trading to the long pull. It creates trend signals and much more. And that's available from Monday, folks, for you guys who want to know that stuff. The other alternative is the masterclass tutorial, which is one-on-one with me, and we do that on this same program, this video conference program I'm using now. It's quite straightforward. You just click on the button at the right time, and we'll be united, as it says. Okay, so move back to the work. Back on the 3-day chart now. This is the British pound. This is the euro, I'm sorry, this is E. Why I'm showing you this stuff is that the currencies, and you can use, don't forget, you can use the Forex signal to trade future currencies. In other words, just locate the same bar you see on the Forex chart. There's got a buy signal on it. Find that same bar on the futures chart, buy at the true high, plus 2 ticks, or sell at the true low, minus 2 ticks. The trendiest markets of all are UST bonds and gold occasionally. Right in the present phase, it's enormous, and the currencies. And the currencies seem to give you just more of these medium-term, long-term, if you like, trends. This one's run from October 24, looking at the downtrend, and it's down to January 25, and 3 months, nice trading. Here's the next one. kicks off in end of February, say early March. You get that first Momo buy signal there. Off it goes all the way up to the high back in about May this year. That's why I'm showing you these charts. All of these, and there's a ton of others in CME currency futures now, folks, which you should be looking at. A lot of clients now don't want to trade Forex in the US in particular, and they're trading currency futures. So the signals are exactly the same. They just create exactly the same signals, either from the Forex or the futures. They're interchangeable. So here's the 3-day of the yen. Same thing. Nice trend up, nice trend down, little rally, 4 bars, then down. Late signal that the trend is now up, and it goes up and up and up, and it stays intact until you get the sell signal. You won't be waiting for the sell signal. You'll be short the day of or the day after the high if you're trading Danielcode. But this is giving you this methodical trend analysis, which most people have never seen. Okay, here's this one. This is the Swiss franc. Whoosho, off it goes March this year. This was the 3-day chart. There's your Momo buy there. Take the next buy, get in the next high if you like. Look for a pullback if you like. Doesn't matter, but it's telling you the trend is up. Get long. Okay, get a nice run up. Plenty of money. Here's the next one. This is the same one. I've converted you now from the 3-day chart we're on. Here's now the daily chart. Okay, and you can see how lucrative this stuff is. $12,500 up, $4,300 down, on and on it goes. Buys to sells to buys to sells. That's giving you the bias of the trend. If you've got an uptrend, only take buy signals. If you've got a downtrend, only take sell signals. If you're more sophisticated, you'll know how to reverse those. But that's the basis of understanding trend from a longer term chart to trade in your daily, normal daily trading. Okay, here's US T-bonds. This is the 3-day chart for US T-bonds. Same thing. It's all the same. They all look the same to you because they are the same. People have this fetish that, oh, I trade the S&P, it's different to everything else. No, it's not. I trade bonds, it's different to everything else. Well, it is, but only to the extent that it's much more reliable than many other markets. But they all react exactly the same with Danielcode. So there you are. I'm just going to show you our trading this week. Been very subdued in the currencies. This is a little sell we were in the euro. Didn't do much, did it? This is the Kiwi, which I gotta think the Kiwi and the Aussie dollar are so badly overvalued. But they don't want to die. I can tell you that. It elected the trade. Down it went, bounced almost all the way back. Not that attractive. Here is the dollar, Canadian, the loonie, US Canadian dollar pair. It's called the loonie. That's their national bird, I believe. The loonie, and we're in a long trade there this week. And you can see the market, the futures are much, much better. Here's a big trade in crude oil. A flip me buy and a success buy. Was just a bit congested down there. One came right after the other, but that's sitting on almost $11,000, and we're still long that market. Here's natural gas, much the same thing. We had a TO3 buy signal. You can't see the lines that set it up because this chart has moved on, but there was a blue line right at the low of that bar that says TO3 buy signal. The first test for all these signals, of course, is target recognition, as you know. So there, 4,500 in nat gas. Wishoff's gone in a great hurry. It was very nice. It was good stuff. Here's wheat. This has been a cracking good trade, hasn't it? Same thing, where the arrow is saying TO3 buy signal. There was a blue line there. It's been taken off now because actually went through there, but it created the signal. It still observes these numbers. It has to. Look where the low came. This is a high momentum push down that finished up being a key reversal bar. But look at the low at that 522 correct 2 number right there. Nailed it exactly. Off it goes. $1,900 for wheat. It's a small market or small contract. Good lot of money for that trade. So, folks, if you haven't already had a free trial, please go to www.thedanielcode.com. Start your free trial. Just hit the register button. Any issues, contact Terry at support at the Daniel Code, and he will get you sorted. This is our disclaimer, which I show you every week whenever I talk to you about these things, and it's important that you understand if you don't know what you're doing, don't risk real money trading. You wouldn't get in a car and try and drive if you didn't know how, would you? You'd kill yourself or someone else. Same thing with trading. If you don't know what you're doing, you'll lose your money. So I hope you've enjoyed that, folks. I've had to rush through it a bit because I'm cognizant that it's long, but I could talk much more about it. And I think what I'll do is I'll probably do a webinar on short-term trading because I know so many of you are into it. As I say, if you're going to do it, I'd rather you did it the best way and you were safe as well as highly profitable, which you will be with Danielcode. All right, well, thank you for sticking with me. Gig, thanks for your support, my friend. Grand to have you here with us. And Jeff, wonderful to see you here, my friend. You've been with us for years and years, haven't you? It's wonderful stuff. Sean's joined us from Adelaide, so a number of other people. Thank you, folks. Back to work on Friday for you lot. And enjoy your weekend, and thank you for being with me. For those who have been away on holiday, Terry will post this on the website tomorrow. Bye-bye for now. Yeah, okay, King, I'll do that. You bet.